Hello and welcome back to another weekly market update. Okay, here we are with lots of important news developments that happened over the past few days, as you know, in the geopolitical context. And then we will, of course, this is going to affect the markets. This is going to move the markets. And here we'll see how is more likely to affect them. What are the more likely outcomes that we'll see on the markets? First of all, remember that this is not financial advice. This is my own opinion, my personal view, and please do make your own research before you trade. All right, so let's go. Let's start because we have lots of things to talk about. So here we are with Bitcoin. As you see, Bitcoin has been coming down. Yesterday, actually, we had this big movement to the downside. So we came basically to touch the 98,000. We fill in this gap. Remember in the previous videos, I was talking to you about fair value gaps and how these big gaps are very likely to be filled up. So here, let me draw for you this fair value gap daily because we are on a daily chart. So if you take this, the point of this week to the point of this week, then you will see here the fair value gap on the daily time frame, which are quite important fair value gaps on the daily time frame, because here a lot of liquidity is trapped. So it means here the people were heavily buying on this candle, and then a lot of orders were left here where people could have traded. So then the market normally comes back and grab all this liquidity that was trapped on the upside. So here we can see with the candle yesterday that we almost fill the gap 100%. So you don't have to fill it up 100%. So that's why it was fair to stop here. Right, now check that we have another one here. It's a bit smaller. This other fair value gap, sorry, is a bit smaller on the daily, but if you put 2 days, then it's big as well. So on the daily it would be like this, but since this is also a green candle, then we can take it all the way from here on the 2 days, and then we will have this gap again. It is really far from where we are, but it is not impossible. I want to show you why. And now let me show you a possible level. I'm not saying that it is going to happen. I'm not saying that the market is going to crash immediately. There are different possibilities at the moment that we have to obviously follow the geopolitical developments to see what's going to happen. But this is in the case that the markets start showing a negative move, that the political situation it becomes really complicated, then the markets will have a possible downside. And then how do we know where can we stop? As I mentioned, well, one way is to see this fair value gap, which corresponds to this 91,000 key level that I draw here. And why is it this key level? Because it was previous support for these moves that we had here in the past. So that's why this can act as support again, so we can come visit this area again, which goes hand in hand with the fair value gap. And we have a third confluence here. If you take here a Fibonacci retracement from the swing low to the swing high of this move on the daily moves, then we can see here that we are precisely between the 0.5 and 0.618 levels, which is the golden ratio, the 0.618. So here we are in the so-called golden zone. So if we come to this level, then we're touching the golden zone and would be a nice place for a rebound. So this would be the bearish scenario. So remember, this would be the bearish scenario. So we have to see. And if we are going to go down, this is where it will likely come to visit this level. Why? Because you can see here that there's also a lot of liquidity trapped here. So we have several confluences on this level. That's why I think this is a fair level to have an eye on. So we can see here at the moment, we can see here that we are trying to go back after these several days of coming down. Here we had yesterday a candle that was heavily bought. You can see this wick going up. However, if we start, we come to these levels, these support now resistant levels, and we start to lose these levels. We don't pass this level. Let's make it with a rectangle. It is more obvious. So if we have this level here, and we don't pass this level, we do something like this. If we come here, do something like this, and then reject this level, well, then we will revisit this wick, then we will fill in this wick, and from here we can see if this level doesn't offer any support, and then we will go to the next level as I mentioned, just as we did here. Look what happened here. Here we had this, we came down here, we revisit this, try to pass this level, we didn't pass this level, then we came down to touch this level. So that is the most logical thing to happen. But there can also, as I said, there can be a bullish scenario. So the bullish scenario can be that we pass this level and we stay above this level. Then we start to regain confidence, and then we can go and visit this level and probably go to all-time highs. But we have to see. At the moment, it's nothing clear. We have to wait and see what happens when we are around these levels. It can be that today is resolved. It can be that today we are rejected, heavily rejected from here, or that we pass with a good impulse to the upside, we pass this level. So we have to pay attention to this. So let's go quickly to the other markets. Something that I wanted to show you is that due to this geopolitical situation, it's obvious that the volatility is going to start increasing. So we can check here the volatility index. So you saw that we put this this support level last time. Well, we came down to this level, and then we were we started to go up again. This, when volatility goes up, it doesn't mean that the markets are going to go up. It just means that we are going to have a big move to the upside or big move to the downside. So in this case, if the trend is to the downside, it is more likely that we are going to have a big move to the downside, and the other way around. So if the trend is to the upside, it's more likely that we are going to have a big move to the upside. So then we have here the volatility is slowly starting to increase, so that's why the trend is accelerating. So probably you can relate it more like this. Like if volatility increases, the trend is going to accelerate in whatever direction it's going. So we are seeing here that the volatility is increasing. So, and since the markets are going down, it is more likely that the trend is going to increase to the downside. So let's see. So for instance, here we have with the Dow Jones. Dow Jones, we can see here that we touched this support level, then we went up, but we have to see at the moment how do the market open in the for the America session, for the US session. So we have to see if we continue going up here, or if this is just a move to shake off the weak hands, and then we will have a rejection and coming down here. So we have to pay attention to what's going to happen during the opening of the American session. If we are just not shaking out the weak hands at the moment, and then we can reject. Again, we can do the same measure that we did before with Bitcoin. We can take a Fibonacci from the low level to the higher level. So we take the last swing of the daily time frame, and then we can see here that where is the golden zone is around here, is around the 0.0618. So it can be a bit up, a bit down. So it can be that we come somewhere here to touch these levels. let's see what's going on with the US 500. Remember that here we are on the CFD, so that is to see just what is the sentiment of the market for the Asian and the European session, but because we are still waiting for the American session when the official trade of the American stocks begin, obviously. So with the S&P 500, we can see here that we were close to the all-time high, but we had this huge rejection. This candle shows us rejection. So with this candle that had rejection, we started to turn the trend to the downside. It's still not, if you can see the market structure, so for instance, you can see here the market structure that goes from here to here to here to here and now to here. So the market structure is still on this support level, right? I mean, you can put more swings if you want. I'm just making the big swings. You can say that we have 1, 2, 3, 4. We can say that we still have a fifth swing to come. It can be possible. So as I said, all depends what's going to happen now on the coming days, probably today, tomorrow, what's going to happen if we are going to break these resistance levels or if we are going to break these support levels. So we have these two important areas at the moment to check. So if we're going to break this resistance level or if we're going to break this support level. So we are at the moment in between in this range. So a break to the downside would confirm that we are going to keep going down to at least this level, or a break to the upside, it shows that we are going to have a valid 5 swings to the upside. So we have to pay attention to what's coming on the next days. And then again, we can put our Fibonacci levels, and from here we can see where tentatively, in case that we go down, where we might touch these levels. So here we can see the golden ratio. So here we see an important gap that we can come probably to fill in this gap and probably just touch this level or touch this other level. But here, look at that here corresponding to the 0.618, we have another gap. So it can be possible that we come all the way down to touch this level. As I said before, this is not for sure. I'm not saying that it is going to happen. I'm just saying that it is likely, and we have to evaluate the situation as things are now. We have to evaluate the situation on a daily basis. So we have to check what's going to happen today, what's going to happen tomorrow, and so on. So now let's go quickly to the let's do quickly the Russell, the US 2000. The US 2000, you have the same story here. Here I left this this mark that we had previously because we are currently not passing this previous swing. So we had here this is probably what people call on market structure the change of character on a big time frame, on a daily time frame, because if we come from this swing, if we don't stay above this line and start drawing something up like this, if we don't stay above this, then it means we haven't changed the character of the trend. So we try to change the character here, but at the end, if we get rejection, it means that we are still doing swings to the downside. It doesn't mean that we are going to break this low level. It can be that it's just going to take another chance to see if we break this structure. So what do we have here? Again, we can do a Fibonacci from the lowest point to the highest point, and then see where do we go. And see, you can see here, well, this gap, the Russell filled this gap quickly here with these candles, but this gap still open. So we can again come here to the golden ratio and touch this level. So we know that the Russell has bigger swings, so for the S&P it will be less likely to come all the way down here, but for the Russell it is more likely that comes here. It's like a little bit like the crypto. Well, let's go quickly to the US Nasdaq, the US tech. So I left here this trend line for you guys because look, we broke this trend line, but apparently we're revisiting the trend line. So it is going to be important to see what happens with this trend line. So what happens if we use it as support and we bounce back up? That's a good news. But if we break to the downside this trend line, then it means that we are going to go and likely revisit this or the next level. Again, let's do our Fibonacci of the previous swing, and then we can see roughly the levels we can visit. So we have this gap here again, this gap here again, which goes hand in hand with the golden ratio. So let's see what happens if the market decides to go up or decides to go down. Let's go quickly with gold, some stocks, and then we finish quickly so that I don't bother you for too long. And we can also make an update for the in the next days to see how markets evolve. Right, so let's go to silver. So silver, I mark here this block, order block that we didn't pass. So this is an important order block from a long time ago. So we can see here that this order block from 2012 was respected. So we are generating a huge cup, probably a handle pattern. That would be good news for silver, because if we have this huge cup and then we just draw a handle here and then we go up again, we can break this level and then probably go up and revisit the highs, the all-time highs, the 44, 45 level for silver. So, but at the moment we found rejection here. We found rejection at this other block, and then we are coming down, likely to touch this level, because as you can see here again, we have this fair value gap on the daily time frame that it is likely that we are gonna fill, because here we just tip our toes on this fair value gap with these two candles, but we didn't fill more than just let's say that 10% or something like that. So it's likely that we come to get more liquidity from here. Gold, what's going on with gold? Gold, we're still respecting this trend line here. We're still respecting this trend line. Let's see what happens with gold if we are going to continue respecting this trend line, or if we are going to break the trend line to the downside. If we break the trend line to the downside, well, it is likely that we come and grab and touch this key level. So we have here another important order block. I guess this is from the Fibonacci. I think this might be a big Fibonacci from all the way up. So this is a huge Fibonacci. Oh yeah, I draw this from Fibonacci level. You can see here that it is the golden zone. So if things go bad for gold, then this is medium term. This is not going to happen in this week. So this medium term, if things go bad, then we might revisit this area. So you can see here that this was an important swing area here, an important support area, and then we can revisit this area. So let's delete this so that we don't get confused, but this is just a possibility. And then we can do the other more short-term possibility, which is the latest swing. So we had this swing to the downside, we swing to the upside, so, and now we have this other possibility, which is here, which, as I was saying, so this key level. So this key level corresponds to the golden ratio. So if we break, it's more likely that we come here. And then from here, we can see if we go down to the other important area that we had previously, or if we just find support here. That, as we know, that goes hand in hand with the dollar index. Let's check quickly the dollar index, because the dollar index is going up, or we have these old trend lines that well, look at this trend line. We can use it probably. This is already too old, so we can use this trend line and see. Okay, we had these two other blocks here at the bottom. We found support on this other block. We'll see that we didn't touch this order block, this lower order block in the 97 range, but we found support here. So now we started to go up, so it means that means gold. That's why gold is coming down, and gold and silver are coming down because the dollar started to go up, and the same goes for Bitcoin. So now look at this trend line that we had from a long time ago, and then we are trying to go up and regain this trend. So if we regain this trend, then it is likely that we will go and touch this key level or even this order block. Here you can see important confluence. You can see here important confluence here between these highs and these trend lines. So if we break this clearly, then we will have more possibilities to go up. And we can do the inverse here. We can take the last swing from the top to the bottom and then check where is our more likely zone to come here if the dollar is going to continue its journey down. So if we find rejection around this area, let's see from here, from the 0.58 to 0.0618 to the 0.786, then we will find, so which is precisely this key level, then we will continue our journey down. If we cross these levels, then dollar can go higher. Then we can, as I said with gold, then we take a bigger swing, the full swing, and then we see, well, where is the more likely level? Then the more likely level is here, is the 0.618 here of the full whole swing, which is roughly close to this key level, so we might come all the way to this key level. But that we'll see in the future, because at the moment we are far from there, so that it will take weeks, if not months, to do these moves. Right, let's finish quickly with oil. Is important, oil. Excuse me, because look what happened with oil. Due to the tensions in the Middle East, we know that oil reacts to these tensions. So we broke this resistance level, and then from this resistance level we had a single wick here, a single candle here that confirmed this level, and then started to go up again. So we passed this key level, showing us that we are already well consolidated above this key level, and we left already the lows that were around the $58 per barrel. So we see that now we are consolidating above this key level, and we are just going for all these resistance levels. So we have this resistance level that we already passed. We are confirming at the moment. So if you want to trade like this, we are confirming this resistance level at the moment. So if we pass this resistance level, well, we go for the next one, and then so on. So how far are we going to go? Again, we can do the measurement of the Fibonacci, and then, well, we can take the first swing is already done. You can see here, I will show you guys. So the first swing, this swing from here to the low, is already done. So we already passed this the golden ratio, even the upper level of the golden zone, and then we consolidated, which was this key level, and then so this swing is already passed. So we have to then move to the next swing. I think, for what I see, I think we are around there at the moment. Yeah, so we are at the higher level of the golden zone. Look, we are exactly at the higher level of the golden zone, consolidating here and trying to see if we break this level. If we pass this level, then we go for the next swing, which will be this. So oh, okay, so sorry, this level probably is also gone, because now we are consolidating up around the golden area of this big swing. So from here we can find rejection. So this is the correct one now. At the moment we can find rejection and continue our journey down, or we can find support here and go up, right? So then we can take a bigger swing like this one and see if we start to go up again, and here we can see where are we gonna go. Or we can already go for the full swing, which is this one, which is more it looks more likely at the moment. So then we can go to this level and touch this. Look, this level, this top is precisely at the 0.786, which is the top of the golden zone. Personally, I call golden zone all this area from here to here. All this for me is the golden zone. Look how much was traded here until we broke to the downside from this golden zone. So we are consolidating. It's likely that we are going to consolidate like we did here around this golden zone. And if tensions continue to rise in the Middle East, then we will break this zone to the upside, and then we will have a higher oil prices, which in the fundamental reasoning looks unlikely. Why? Because this will bring inflation back, and nobody wants inflation back. So I think all governments are fighting inflation, so they don't want inflation back. So that's why it looks unlikely that they will let the tensions go too high to have these super high prices of oil, because that will bring them inflation too high. So it is more likely that we either reject this zone and go back to these levels, consolidate around this area, or just consolidate around this golden area. But we'll see. We don't know. It might be possible that everything goes really bad, and then we have super high oil prices and then high inflation, and then the markets will be really in a bad situation. Right. So I don't want to check stocks because it's been already quite long now. The market is still not open. So as I said, we can do another video in the week, and then we can check how the stocks and markets evolve. All right. Thank you very much for watching. Please subscribe to the channel. Give me a like if you like the content, and see you in the next one.